Welcome, everyone. Thanks for joining. My name's Mark Palmer, and along with our guests, you can see we have Andrew, Shani, and Troy to talk all things relocating to the UK. We try to do these every few months for people looking at moving, mainly from South Africa, but I think we've got someone from Canada today as well coming over, which is good. So we're just trying to give you a bit of an idea on how things work, what to do, what not to do, etc., and just be open for anybody to ask any questions you've got. We've got great guests today. We've got Shani, who runs on the visa side of things, and Troy is on the financial side of things. So two really great guys. Both South Africans. South Africans are coming over to England for been there a few years now, both of them, families, etc. So we're going to start off just with a brief introduction for myself and Andrew. There's me. That's a few years ago now, less grey hair. Got more grey hairs now. So I've been in the area for quite a long time, as you can see from my little resume there. I was in the property world for many, many years, since 1986. I was an estate agent for the first 21 years, and since then, the last 17, 18 years now in corporate relocation. So I've been a tenant myself, been a land myself, run a lettings and property management department. So I've seen every aspect you can imagine of people moving. So when anybody asks me a question, I can see it from a landlord's perspective, tenant's perspective, agent's perspective. I've helped numerous clients over the years, and in the last 5 or 10 years, more importantly since 2007, dealt with corporate relocation. The last 5 years or so, it's been focusing more on what I call normal people coming to England, mainly from South Africa, but from all over the world. So ask me any questions you've got, moving on. So it's myself and Andrew. So I cover London and the Southeast. Andrew comes on to cover Manchester and the North. So these are some of the reviews we've had. We're up to 91 reviews now, which I'm quite pleased about. All various people from all over the world on here. And it's great to be able to help because I've been in the business for a long, long time now, as you can see from the grey hair, many, many years. So you know how to speak to the agents. We know what to say, what not to say. And it can be incredibly tricky, as you know. Most people we deal with are coming from another country and they want to find something before they get here, because otherwise you try to use an Airbnb or corporate relocation apartment and it's super expensive. And with around 23, 24 to 1 to the pound, super expensive. So here's some nice reviews from some real lovely people that we've dealt with. And so throughout the conversations, anybody's got any questions, please save them up or put them in the chat. Response to everybody, more than happy to do it. I'm now going to hand you over to Andrew. So Andrew covers the north, I cover London and the south generally, and Andrew's kind of from Manchester based, but covers in and around those areas. So Andrew, over to you.
Thanks, Mark, and yeah, thank you to everyone for obviously giving the time up to join the webinar. As you can see, a few grey hairs myself, so I've got a few years on Mark. Been doing it not as long, so I'm both a landlord, help with people relocating, and invest personally as well. So kind of cover all bases, so I can see where it is from a landlord perspective, also working with agents, etc. So 2004, kind of just over 20 years ago, was first investment, which I still own. And then it's only since 2013, really, we've been helping people relocate from all over the world. So we'll help with individual personal relocations, coming with pets, through to corporate relocations who maybe get assistance from their company. So we did a check, as we do, kind of end of year. We've done over 1,000 moves since 2013. Helped and assisted, advised and negotiated on, I think it's over £30 million worth of assets, property wise. So yeah, we're pretty well equipped to deal with all situations. We had one move in just before Christmas. They moved from South Africa. They joined a webinar 2 years ago, actually, self-employed and moving over. So it was a lot more technical. But we had to help with all the tax side, all the setting up a company in the UK. It was quite a complex move, but we got there. So over the course of 4, 5, 6 months, yeah. So it was. We know that every case is different, as Mark will testify as well. We're small, bespoke company, so you deal with us from start to end. and we build that relationship and basically advise as best as we can and make sure we always get the results. Not on just kind of areas, but also know the agents, know what to say, know what to look out for. So there's so many hidden things you don't know. We had a client call last week who's moved to Newcastle. Now we're booked out until February, unfortunately. So I had to be transparent and say, look, I'm happy to help from afar. We can help, but I can't physically help on the search until February. So I think it's a key point to plan in advance. We always say 6 to 8 weeks is kind of the key time frame. Um, don't arrive and then think to find somewhere, because you will spend a lot of money in hotels and everything else that comes with living out of hotels. So yeah, hopefully we're well placed to advise. Open to any questions. Like to think we're an open book. I think Mark will have had calls previously as well, and we know it's a life change, so that the consultation call for us is to make sure it's the right move for you as well. So yeah, open to anything, and yeah, open to any questions as well. Thanks, Mark.
Thanks, Andrew. So, on to our first guest. We have Shani. Known Shani for a few years now. She moved over. I'll let her tell you the story, basically. Shani, over to you.
Hi. Yeah, I moved over to the UK in 2019 with my son, and discovered when I was, doing the visa process for him, that it's quite complicated. A lot of information is required. It's incredibly stressful when it's your life. And as a result, I landed up training to give immigration advice. I had given a lot of advice on online platforms previously, and then thought, let's get accredited, let's register, let's be, above board and legal. And I set up my business. My market is mainly South African people. I have relocated, or I have done visas for a couple of Canadians, Malaysians, etc. But generally, it's a South African market that I deal with. My business is what I would like to call a boutique or bespoke business. When you deal with me, you deal with me. I don't have, a staff of 20 where, you're going to be passed from pillar to post and not know who you're dealing with and have to tell your story over and over and over again. The visas that I deal with are listed on the screen now. So spouse and dependent visas, these are for the family of British citizens. This would include unmarried partners, and it includes the option of a fiancé visa for those that want to come over, get married, and then apply for a spouse visa in country. Ancestry visas, these are for people born in Commonwealth countries with a grandparent born in the UK. The nice part about these visas is your family doesn't have to be split up, so you can move over in one go as a family, rather than having to prove finances and employment as you do with the spouse visa. Skilled worker and global talent, these are sort of self-explanatory. Skilled worker visas do require sponsorship from an accredited company. I don't place people in work. You would come to me at the point of receiving a job offer from your company, where you have a certificate of sponsorship in place, or where you need my assistance to get the company registered as accredited, get the certificate of sponsorship, and then the visa. Global talent visas apply to people who are exceptional in their field. They either have doctorates, or they are coming over on fellowships to universities, etc. And the process is kind of similar to the skilled worker visa. Then once you're here, it's often not the end of the journey. The spouse and dependent visas require renewal 2 and a bit years into your stay in the UK. And then once you hit the 5-year mark for all of the above visas, you would want to apply for indefinite leave to remain, which allows you to live and work in the UK indefinitely. You cannot leave the UK for 2 years or more. Your indefinite leave to remain will be revoked. These applications require quite a lot of evidence and documentation and all the rest of it. So I do say to people from day one, start keeping records of where you've lived, your employment, etc., etc. So when it comes time to apply for both of these, you have it all. The rules are quite strict. If you don't have evidence of your residence, and stamps in and out in your passport is not considered evidence of residence, your application will be declined. The step after that would be naturalization, citizenship, usually a year after your indefinite leave to remain. If you're married to a British citizen, you can apply immediately once you have indefinite leave to remain. Again, there's costs involved with that. And for children, they don't naturalize, they register under a process called MN1. I also offer consultancy services and document checking. So if you're doing an application and you're just a little concerned about whether your supporting documentation is sufficient, I do offer the service of making sure that everything that you have is sufficient for your application to progress. I live just outside of Oxford. As I said previously, I am registered. It is a legal requirement in the UK if you're going to give immigration advice to be registered, which with what is now called the Immigration Advice Authority. Just a note of warning, if you use people who are not registered within the UK, A, it's illegal, and B, you've got no recourse. So, we have to be insured, have indemnity insurance, etc., etc. So I would always advise whether you use me or somebody else, you make sure that they are registered. And that's pretty much my business in a nutshell. And we'll have questions once Troy has spoken. Thanks.
Hi guys, thank you Shani, Mark, Andrew. It's Troy here. I'm a mortgage and protection advisor as well as a will writer. I run two companies, but it's really just me. So it's Premier Mortgages and Protection and ABC Wills. I think a little bit about me. I've been in the property game for the majority of my working life, and I'm today basically I'm going to run you through a very brief case study of I've actually picked on a South African family, but I do work with foreign nationals from pretty much everywhere. I've worked with anything from Americans to Koreans who are moving over. There's a lot of people who move to the UK, and I do generally specialize in foreign nationals. That said, let's head on to Mr. and Mrs. Smith. So for today's sake, I'm going to refer to Mr. and Mrs. Smith as a South African couple who are moving over, obviously from South Africa to the UK. They're coming over, they're employed. Obviously, you already have your visa in place, you'll have somewhere to live. I can speak to people from while they're still in South Africa to get planning done timeously, but sometimes even if you're here, it's fine. And we're going to walk you through their situation financially, just around mortgage planning, protection, which is actually your life insurance type products, and just the importance of wills and what an LPA is and why it's important. So hypothetically speaking, Mr. and Mrs. Smith. Mr. Smith is 32 years old. He's a healthy, non-smoking male adult who earns about 42 grand a year, obviously in pounds. Mrs. Smith is a little bit younger. She's 30 years old. She's a healthy, also non-smoker, earning about 55k a year. And they have two young children. Let's say they're aged 5 and 3 or 5 and 6, or whatever the case is. They're dependent. Their first goal is their goals are they want to buy a house, or at least their first UK house. They want to look at the options and what's entailed in planning for it. They want to make sure that they've got sufficient insurance in place to protect the family in case of either a death, a critical illness, loss of income due to illness, and so on and so forth. And clearly, they're coming from a foreign country. They want to understand the process behind wills, probate, etc. What happens with guardianship and so on and so forth. So we start the conversation. Mr. and Mrs. Smith come to me and they approach me because they want to buy a house. So they've now looked at a house and they found a house valued at 480K, and they come and we start discussing, and we can start going through their income, their combined income, their affordability. So they've now got this combined income of about 97K. We look at the deposit, also where the deposit comes from. So I'm picking on South Africa today for the Canadian in the group. Canada's not on the high risk, but South Africa is. Any money coming from a high risk country is going to trigger an enhanced due diligence. Guys, it's painful. I'm going to stress that out. It's really painful to go through this, but it's for everybody's protection. What they're looking for really is they're just looking to make sure that this money isn't coming from somewhere dodgy, and it's triggered by anti-money laundering and anti-terrorism. And that's why the UK remains a fairly safe place to live, even though there is so much happening here and so many people coming through its borders. So all of this goes through, let's say we've vetted the money and we start going through affordability. We would then sit and I would explain to you guys, roughly, as a UK resident who's a foreign national, I may have over 100 lenders, and sometimes when I'm looking at mortgages, I've got anywhere between 5,000 and 8,000 products. And when I'm looking at these mortgages, it's always changing. So the mortgage world in the UK is vastly different to South Africa. So we'll sit and we'll show a lot of the intricate details about what we're looking for, and we'll plan. And not all of the lenders are going to look at you because everybody's situation is different. So you'll find John Smith is here on a spousal visa, whereas Mike McIntyre, not the comedian, is British and his wife is a foreign national. They're going to be looking at different lenders. So we're going to really tailor it to your situation. We're going to take a really tailored approach to what you're looking for. We're going to look at things like, is your income increasing? Are you new at your job? Are you expecting to earn more? Do we want a fixed rate because we expect the rates to go up and we want to make sure we protect it for a while? Do we want a variable rate? Do we want a top and tailor rate? There's lots of things that we can do. If you've got enough of a deposit, we can even look at things like interest-only mortgages, which are a big thing in the UK, something that you don't get in South Africa, or not often, not common. We'll look at what sort of deposit you need. And if your income, some people come here and they've still got foreign income, so they're still working for the company in South Africa or Canada, wherever it is. We're going to look at how that money is looked at, and if which lenders will accept it, and how they are going to react to exchange rate fluctuations, income fluctuations, and the risks thereabout. And obviously there may or may not be an enhanced due diligence on that, but we're going to make sure that it's properly done and we can source the correct, so we don't waste your time, the correct lenders, and we'll always know more or less what we're doing. Now, I'm not going to go into too much detail on anything, because obviously you need to really have one-to-one conversations on these things. But to lean over from mortgages to protection in the UK refers to a lot of different things. In South Africa, you think of protection, you think of somebody or your security or somebody protecting somebody. Over here, it's not that. It's looking at your insurance products, so your house insurance, your life insurance, your income protection, critical illness protection, even things like private medical. And yes, you do get private medical here. The NHS is fantastic, don't get me wrong, but private medical bridges a lot of the gaps. And again, we would have a tailored conversation around your needs. But picking on Mr. and Mrs. Smith, so they bought this, they're buying this house for 480K, they're putting down 120K because they've got a lot of savings, so they need to mortgage protect against that debt of £360,000. And the main reason they would do this is so that they don't leave that debt for each other or for their kids. And we could do something called a joint cover protection. Now, in South Africa, you don't think of these things because often the life insurance is taken care of by the mortgage or the bond, and they take it out as part of their costs. Whereas over here, it's separate. It's not set in law that it's something you have to have. It's good practice to have it. House insurance, you do have to have, or at least buildings insurance, you do have to have. But life insurance is not forced on you. It's just good practice. We would look at things like income protection and how it's based around what you do for a living, how much of it would cover, how is it taxed. We'd also look at the tax implications of life insurance, etc. We could look at critical illness policies. Why do we need a critical illness policy? What will it protect? And all of these policies, we will look at what the relevant terms are. So why do we need it? How long do we need it? So you may only particularly want life insurance to protect against your young kids. You may want it until you retire. You may want it whole of life. There's lots of different reasons for different things, and again, it'll all be tailored directly down to you. Providers here look at things a little bit differently, and there are different tax implications on different products. All right. Now, all of this we tailor make it, and we take it and we say, right, take Mr. and Mrs. Smith and their family and say, all right, you should protect yourself by will in the event of your death. Now, where wills are for death, LPAs or lasting power of attorneys are for you very much alive, but you've lost capacity. Guys, I am talking a lot, so if I start running over, just let me know. But yeah, you've lost capacity. A will sit and point your assets, your gifts, etc., where you want it to go. We will look at tax implications. We'll look at, do you need dual wills? Should you have a single will? What is the situation and why should you look at these things? We'll look at who makes a good executor, who makes a good trustee. What is the role of the executor and the trustee? We'll look at everything from your computer that you're working on, through the house you bought, down to your kids' guardianship, sometimes temporary guardianship and full-time guardianship. We'll look at things like pets. We'll look at funeral wishes, etc. And the power of attorneys would then be split into two separate documents: health and welfare and property and finance. And you can have different attorneys or people talking on your behalf if you lose capacity in these fields. Now, a power of attorney document is really it's quite a costly document, but it's really an important document, because in the UK, a consenting adult cannot talk on behalf of another one, even if you're married. You don't have the right to talk on their behalf unless you are appointed as an attorney. And so that would mean that you can't go to the bank and talk to the bank, or even the GP, and find out how your wife's doing. You need to have that permission in place. They become quite long documents. I'm not going to go into too much detail because, again, everybody's situation is different. But you'll have it to talk to medical professionals, care homes, finance institutions, to do things like make payments and pay your debts, etc. And that's really just a very, very quick, basic overview of everything. From this point, I mean, really, I've just given you a blanket of what can happen, and you can see I'm available on either pmap.life or abcwills.co.uk. My contact number is there. Feel free to get hold of me. We can book a one-to-one consultation. I don't charge for a consultation, so I am here. I am available to talk to you. Sometimes we'll have a Teams call, and later on we'll have a more detailed conversation. Please remember, sorry, just on the previous slide, there is a +44 in front of the number if you're phoning internationally. And yeah, if you've got any questions, either ping them in the chat and I'll attend them, or yeah, feel free to get hold of me, and I look forward to helping you through your journey to the UK and welcoming you here sometimes with a beer or coffee. I'll pass you back over to Mark. Thank you, guys.
Thanks, Troy. He's never offered me a beer, by the way, so you'll be lucky if you get a beer out of him. So I'm sure it'll happen one day. Thanks, Troy. Appreciate it. I just wanted to, yeah, I know. I just want to ask Shani a question. With sorry, Shani, going back to when you're first of all trying to apply for. Can you go back on the slides, please? Sorry, sounds good. Okay, when you're going for ILR or FLR, how long do you need to be here for before you can actually apply? Is that 3-5 years? Is it a number? It depends on.
Okay, so further leave to remain when you are on a spouse visa or unmarried partner. Basically, your partner is a British citizen, anytime from 2.5 years residence up until the expiry of your visa, which would be 2 years and 9 months. For ILR, it's 5 years residency.
Okay.
Further leave to remain, sometimes if you get a skilled worker visa and it's been issued for 3 years, you need to then apply for a new visa to get you your 2 further years to get to ILR. So generally, rule of thumb is further leave to remain in terms of spouse and dependent visas, 2.5 years, you need to reapply. There are cost implications, of course. There are visa fees, there are IHS fees again. And then indefinite leave to remain at the 5-year mark is in the region of £3,000 per person. So it's worth noting all the fees that you're going to have to pay going forward. And I tend to say for a family of 4 people coming over on Ancestry, you really should be putting away £300 a month from month 1 to cover these fees when it gets to that point, because it's a lot of money to come up with. And then that saving would cover you for indefinite leave to remain and then your citizenship application the following year.
Yeah. Wow. Nothing's cheap, is it, nowadays? So
no, sadly not.
Mark or Andrew, can I ask you guys a question?
Yeah.
If somebody's looking at moving over to the UK, when should they really contact you to actually start having these conversations about properties?
Okay, good question. It depends on, okay, let's say we're in January now and someone's coming over this year. Well, normally for us to start actually helping you find a property is probably 2 to 3 months before you need to arrive. But if you're just calling just to get an idea on what prices are like, what to do, what not to do, if you're looking for a job, where should I live, where should I not live? Do I work from home 5 days a week? Do I work from home 2 or 3 days a week? Do I need to find a job, etc., etc.? I always say to people, if you're looking 6, 9, 12 months, just call us and have a chat. We can speak again in between because it's no problem at all. Depends where you want to live, in the north, where Andrew's based, or in the south, where I'm based. But I think overall, everybody's different. If you've got a job to come to, as we discussed the other day, Troy, someone has a job to go to, they're coming over, say, April time. So I'm speaking to someone this afternoon in about 2 hours' time to come over in April. Perfect time for me to speak to them because they're coming over in April, 2 to 3 months' time for us to try and solve them, hopefully a rental property before they arrive. Because otherwise, if you try to find service accommodation when you get here, if you think it's expensive already, as you know, service accommodation, temporary accommodation is so expensive, £100, £200 a night sometimes. So that's like £6,000 a month it can cost you. That would just eradicate your cash sum in one easy go. It's crazy. So typically 2 to 3 months before you need to be here, we probably need to start acting for you. But anytime 6, 12 months, or even next year, if you're looking, always happy to try and guide you, like all you guys as well, and Shani, just happy to guide you to keep you on the straight and narrow. We need to go down this route, down that route, etc. Give you a rough idea on costs, but just help you funnel into where you need to get that advice. Anything different to that, Andrew, would you say, or?
No, I mean, so I suppose Rachel's a good example of who we moved in December. So she was on the webinar 2 years ago. But it's a good example of, look, they were moving over self-employed and they had a company in South Africa, but we needed stuff like end of year accounts. So stuff like that, we need months to prepare and have all the required paperwork to apply. If you're moving over with a job in place or moving over happy to pay rent up front, I suppose 6 to 8 weeks is the prime. Anything less than that is kind of not ideal. Anything more than that is great as well. I mean, we, similar to Troy, we always do the free consultation calls, because you don't know what you don't know. I mean, I've had calls with people and they maybe didn't realize the affordability of the UK, and although it sounds bad, I need to make sure that they're fully aware and transparent of costs involved. So I know a lot of things with rental prices, it may be advertised, maybe not down south, but rental prices advertised at £1,000. But then after bills and council tax, which catches a lot of people out, it maybe comes in at 1,400. So if you're moving over as a single parent on 30,000, then obviously affordability at 1,000 maybe, but at 1,400, it becomes a struggle. So they're the kind of questions I'm personally asking on the initial briefing call. If not moving over with a job, then obviously savings as well. It's a bit of a deep dive. I think Mark does the same. But the more information we have, the better to be able to advise. So, yeah, that's yeah. Whether they're moving 6 weeks from now or 6 months, the call is the best way to start, because they may say, hey, maybe it's not for us, or hey, we need to kind of reassess and make a few changes in the next 2-3 months so we can still go ahead and move in August, for example.
Yeah, we all have all calls, don't we? Somebody's moving over February, May, end of this year. There's different ways to speak to them. The more prepared you can be, like anything, before you're armed, okay, for everybody. So if someone is coming over 2 or 3 months' time, that's perfect time for us. If they're coming over in a year's time, 6 months or whatever, fine, we can still help and guide you to the where you want to be. Do you want to live in the north, where Andrew covers? Do you want to live in the south, where we cover, which is more expensive, obviously? There's more value for money in Manchester. Where's your job going to be? So many different sort of permutations to go from. But generally speaking, it's good 2 to 3 months before. We can just help you and just guide you through it. It's very complex, our system with the rental side. There's a massive change coming this year as well, with that as well, which we won't bore you with it too much, but there's going to be significant changes this year, and we'll be doing another webinar on it in a few months' time, because that's going to be very complicated, where landlords won't be able to sign you up for like a year contract, which there's massive uproar on that, and it's going to cause untold number of problems for lots and lots of people. But so we just got a question from Robert there. Oh, Shani's just answered it. Oh, well done. That was quick. I was going to ask you to do that, so that's
It's
good.
too quick for us, but let's
Yes,
read
yeah.
for
Well, it was there for a while, wasn't it? So she was obviously preparing her answer as well. So, but have you got any other questions, Robert? Anybody else with a question at all, or everybody's very quiet today? It's actually lunchtime.
Having mentioned self-employment route for people moving over here and obtaining rentals, etc., something that does crop up for me from time to time is people wanting to renew their spouse visa and they're self-employed. There is a lot of documentation required for that. So it is imperative that if that is your route, you make sure everything is in order well prior to the 2.5-year renewal date. You need tax returns, CT600s, letters from your accountants. It's not as simple as just going, here's my business, this is what I earn. It doesn't get accepted and your visa will be declined. So very, very important to have all of those documents in place. And if you are self-employed, get in touch with someone like myself in advance, and I can guide you as to what documents you're going to need, rather than trying to get them, all processed the week before your application goes in, because it's impossible.
I think that's a standard thing in the UK. If you're looking at a mortgage, self-employed can also create. I mean, some people say you can definitely get mortgages self-employed, and they're fairly simple, but you need to have the right documentation, and you need to be trading long enough. And it's not just based on the fact that you traded. You've got to show the profit to the tax man, and that's the figure it's going to be based on. Some lenders are going to look at how much you actually draw out the business, and they're going to look at an average over 2 or 3 years. Whereas if you have a job and you work for, let's say you work for Mark, and he pays you a salary of 50K, we can use that 50K with some lenders from day one. So it makes things a lot simpler. So yeah, you've always got to just make sure that if you're going to the self-employed route, that you speak to somebody so that you understand and make sure you have all the right documentation going forward. It's all simple, but it's all about planning. Shani, I see you've got another question about IHS.
So the IHS fee are your NHS fees that you pay up front. So when you apply for your initial spouse visa or ancestry visa, etc., you have to pay what is known as the International Health Surcharge fee for the length of time that the visa is granted. So for ancestry, for an adult, it's £1,035 per year times 5 years. For a spouse visa, it'll be £1,035 times 3 years for the first visa, and then 2.5 years for the second visa. So, and that's paid up front. You cannot pay it off. You do not get it refunded. If you leave the country, it's paid.
And do you have to pay that twice, in the beginning and at FLR, am I correct?
Yeah, so it's got to cover the entire leave. So like I say, for Ancestry, you pay 5 years up front. There is no renewal for Ancestry.
Okay.
For a spouse visa, there is that renewal halfway through, so then you have to pay again.
Okay.
You pay your visa fees and your IHS fees again.
Good to know. It's something that you've got to save for and be prepared for.
Yeah.
What happens if you can't afford to pay it?
Then you go home.
There's
Unless you can prove that it would put you at risk of homelessness. And this is partially why they now have a salary threshold that you have to meet, etc. Because if you're meeting that salary threshold and sort of, in the government's eyes, living within your means, you should be able to set aside that money. The salary threshold was raised from £18,600 a year to close on 30 that the spouse has to earn before you can bring your spouse into the country. The British citizen has to earn.
Yeah. I see there's a follow-up there. I think it's similar to what we just spoke about.
Yeah, so, you know, that's why I bang on about, you know, it's important to start saving from day one, be aware of the fees. I mean, I had someone approach me who'd used a very well-known South African advisor, and they hadn't been made aware that this had to be renewed at 2.5 years. And their renewal was coming up in a few weeks. And they suddenly had to find all of this money to renew a visa, pay IHS fees for their spouse. So it's so important to get the correct advice at the beginning so that you know what you're in for the whole term.
Plan ahead.
Yeah.
Well, thank you, Nathan. Any more questions from anybody? I know we wanted to take up about 45 minutes and we're getting up to that level. So anybody else? Barry, Robert, any questions?
Hi, it's Barry here. Yeah, you know, my family at the moment are all living across in the UK. Most of them on ancestral visas. My wife has a British passport, and my adoptive parents were both British, and their grandparents were both British. I have been offered a partnership in a construction company across in the UK, so I'm just really viewing what I need to do as an adopted child pre-1960, or whatever the year was, I think 62, in order to get access to the UK, number one, so that I can work in the partnership. And two, how many months a year would I be allowed to stay out of the United Kingdom?
Okay, so Barry, rule of thumb is that you would come on Ancestry, right? And the rule of thumb is 180 days per year, and not more than 450 days in the 5 years prior to citizenship application. So you've got to kind of balance your time out fairly carefully. I would say try not to be out of the country more than 90 days per year, so that over the 5 years, you're not exceeding the 450-day allowance, because it will affect your citizenship application later. And obviously, that is the aim. You want to get that citizenship done. And being married to a British person, you would be able to apply for your citizenship immediately once you have your indefinite leave to remain.
Thank you so much, Shani.
No props.
Any other questions from anybody? Anything else to add? We're coming out the window. We try and leave it around about 45 minutes, which is coming up to that time. But just checking any more questions from anybody, or you've got our contact details. I think everybody, our contact details on the screen, and Troy's and Shani's also as well. But anything else? Anybody else wants to add initially or leave, or otherwise we'll.
Troy, can I ask a question on mortgages? I'm going through a few remortgages this year from the investment side. How are you finding the market? I know it seems to be coming down a bit on the on the rates. Do you kind of see that for the foreseeable, or is it kind of putting
You
a
know
finger
what?
in the air?
It's always a difficult question, that, because it's affected by so many things. Prime example is COVID. We all thought prices were going to go down, and they went crazy.
Yeah,
Um, Towards the end of last year, we started seeing major reductions in rates from a lot of the lenders. At the start of this year, we've actually seen some lenders pushing it up and some lenders pushing it down. So we're a little bit all over the show at the moment. Um, what the future holds, I'm seeing 2-year deals becoming more um, comparable to your 5-year deals. What that tells
yeah,
me is that we're in for more of a bump, because when the 2-year deals start becoming cheaper, they start trying to push the 2-year deals. Whereas now they're trying to push the 5-year deals, so that when rates go down, you're still involved. So, but it's all economics. Sometimes it's backwards and forwards. Really, what I think the most important thing to do is not worry about that. Rather look at your situation, what you can afford. We sit down, we have a look at the situation and say, right, you can, going forward, afford X. Let's lock it in. And obviously, everybody's got a different attitude towards risk. And we take that into account and select a 2-year or a 5-year, or sometimes even if we go into a variable. I've got a lot of clients who specifically want to go into variables because of several reasons. They may want to go into variable because they expect the rates to go down and they want to remortgage in 6 months' time, to either raise capital or whatever the case is, or because they feel something's happening politically in the UK, which is going to be great.
yeah,
My personal mortgage is a 5-year fixed,
yeah,
because I am risk adverse. So I can sit and I would look at something and say, I can afford X, Y, and Z now. I will probably still afford it in 5 years' time. Therefore, I'm happy. Even if rates go down, then I'm tied into something that I can afford. Because if rates go up to 7 or 8%, I'm going to start worrying about losing my home. So it's all about, how the person is going to perceive it, and where they want to go. But these are all discussions that we have, with the client or with yourself. And I mean, same story. If you want to have a chat about it, we can always have a chat, and uh, casual chat, and just run through it and see what's best for you or for your particular client going forward.
yeah. No, I mean, for anyone buying or new to the UK buying process, a mortgage advisor is invaluable. So anyone listening, considering, then yeah, definitely worthwhile, because it's a murky
Absolutely,
world, and
man.
you don't know what you don't know, and you see a 5.7% and a 6.2%, but then there's all these hidden fees, and you're like, oh, didn't know about this. So
There's hidden fees, and there's out of the hundreds of lenders that there are here,
yeah,
um, only 5 may consider you because of your situation.
yeah,
And if you're going to go knock on one door, who's to say that's the right door?
yeah, true.
And where you seeing, let's say you go to, I'll pick on a good lender. Let's take any high street lender, HSBC, NatWest, Nationwide, Skipton, any high street lender. You go and you approach them. You're going to see their products, which is great, but you're not seeing the whole picture.
Yeah,
You're not seeing the fact that Barclays may be a lot cheaper, um, or that their standard variable is much better. And if you go on to it, what are your risks? Because I'll pick on Halifax now. Halifax, one of my favorite lenders, but their standard variable is always high.
yeah,
So if you go on to a standard variable for whatever reason, because you can't remortgage, instead of going up to from 4% to 7%, you're going to jump from 4% to 8.5%, which can
yeah,
be a massive difference. So yeah, it's all about knowing. Like you said, you only know what you know,
yeah,
and speak to somebody, whether it's me or another mortgage advisor. Absolutely, speak to somebody who does it as a profession.
yeah. No, thank you.
No problem. Thank you, guys.
Yeah,
Yeah, if there's no more questions, then I think we'll probably wrap it up. We normally try and keep it about 45 minutes, don't we? So thanks everybody for turning up today, and
yeah,
we'll speak to you guys soon. Any other queries, you've got all our contact details. Please reach out if you like, Barry, Robert, or anybody else. Obviously, you know where we are, and see you very soon.
Lovely. Thanks, Mark. Thanks, Troy.
Bye for now.
Cheers, guys. Thank you.
Bye now.
Have a
Lovely
good
to speak to you
afternoon.
again.
Bye now.
Yes.